Hello and welcome to Banking Frontiers Live. And we are in for some very exciting talks on innovation and on platform. And I'm really excited to bring this wonderful speaker who is going to share some very, very deep insights to you. And this is going to be a series, I am sure, with my conversations with Paolo. I would like to introduce you to Mr. Paolo Sironi, who is the head and global research leader in banking and financial markets at IBM. Paolo, welcome to Banking Frontiers Live.
Oh, thanks for hosting me for this conversation. I've been doing quite a few experiences in my professional life, also fintech entrepreneurs. We might be able to share some of my, if you like, stories, the mistakes I made, the lessons that I've learned, and those that I've learned looking at the fintech scene and the banking scene worldwide in the last 10 years.
Fantastic. So, Paolo, you have written one of the most interesting books, which I have been hearing about in the social media and reading about on banks and fintech on platform economies. How do you define this concept of platform economies today? And how is it really making a strong inroad into the banking and financial and also into the fintech sector today?
So, Babu, one step at a time, we are effectively entering the fourth industrial revolution, which is not just a data revolution, it's a platform revolution, because it's about how we use data in order to create new ways of interacting among ourselves, across institutions, between institutions and individuals. Now, if we think about the internet revolution, which, if you like, precedes what we are seeing today, 10 years into that journey, we see that platforms are the real winners. So Facebook is the platform for my personal life, LinkedIn for my professional life, Amazon is the platform where your audience is going to look for my books. The question becomes, where is the platform for my financial life? Which doesn't really exist because we keep on buying financial services, products, and solutions separately, but we need all of them together in order to resolve our problem, our financial and banking problems in life through our life journey. So we need to find a way to access that capability to see in perspective everything we are doing all together, instead of being siloed into different relationships that sometimes are also operating under the same umbrella of one single brand or financial institution. What is important to understand that most people misunderstood thinking about platforms is that platforms are not necessarily marketplaces. Platforms, first and foremost, when it comes to financial services, correspond to a shift from output economies to outcome economies. And the two are very different. And what changes is not just what clients are doing, but also how clients are paying for that, which makes it complex, but also entertaining in terms of an entrepreneurial journey. Think about a bank that wants to sell $1 billion of a monetary fund to their clients. These are quantities, marketing on products. However, what is happening, also because the margins inside this product is getting smaller and smaller, is that banks need to start focusing on how to sell outcomes to clients. And the outcome means the goal. So they need to help the clients fulfill their personal, their financial, or their entrepreneurial goals. And that is the role of a financial institution, where the asset is just a mean to get into a destination, right? But when they get into that perspective, they understand that it's a complex journey, so it's a planning mechanism, and the value being in the journey requires the journey to be paid for, not the individual products. So in essence, the products, which are the assets, are still there, but they're becoming less and less central in the creation of the final profitability. And the whole journey, which is the planning relationship, becomes foundational. Now, the planning relationship can happen in many different ways on the platform economy. That's what I would just call contextual banking or conscious banking, but there might be time in this conversation to discuss more what they are effectively, so that your audience can understand what we're talking about.
Wonderful. You have very clearly, demarcated the two concepts about contextual banking versus conscious banking in your study. I would probably like to have a little more insight from the horse's mouth on what do you mean by each of these sectors and how are they contributing in this value creation?
So conscious banking and contextual banking emerge as the destinations on what I call the banking reinvention quadrant, which is a graphical representation of the journeys of bank and fintech on the platform economy, which follows two axes like every quadrant. One is information, which is the usage of data through open ecosystems in order to basically create new connections among users and businesses. And the other one is communication, which is basically how you help people to understand what they have to do, the decision they have to make through their financial journey. So it's by leveraging data on hybrid cloud and by learning how to use artificial intelligence to augment, to power up, only in a few cases, replace relationship, that you can reach these two platform strategies, higher business values, which are contextual banking and conscious banking. Now, how are they defined and how they differ, at least at start? Possibility to eliminate frictions from an ecosystem interplay, for example, paying one click, makes banking contextual. That means embedded. And that unlocks new value on the ecosystem because it allows to create connections and behaviors that were not there before. But now, evil is in the details. Since the value is new and banking is embedded, the role of banking is just to facilitate that new interaction. So the remuneration will not come in the end from the transactions that banking facilitates, because that becomes a commodity. So it is important that banks learn how to be orchestrators of those ecosystems while embedding the financial services inside to unlock this new value and monetize the new value. So now it is the need for banks to demonstrate value that makes banking conscious, that means transparent, to unlock hidden value which exists in the banking relationship, which has been buried on a stratification of habits like product orientation, that needs to be transformed into an engagement mechanism based upon that planning relationship, which is where the fee has to be paid for. And we already see that happening. So you see banks attempting the contextual banking journey, where the product is the engagement. You see banks attempting the conscious banking platform journey, where the product is relationship. And that is how they can succeed on the platform economy made of a shift from output to outcomes.
Wonderful. We have been seeing a lot of emergence of fintechs, a lot of neo banks coming in, a lot of platform economies in place, open API and things. What are those great mistakes that the banks and fintechs have made in the last few years, which they can actually study and unlock the value that they have locked for quite some time?
It's an important question. I'd say quite a few. Apart from the misunderstanding of output and outcomes, because they have to better qualify it, there's another one which is really important that basically corresponds to the other axis of the banking innovation quadrant, is a misunderstanding about the pull and push mechanism. So what really motivates people to act in financial services. See this way, banking, at least the revenues that matter going forward, which are about interfaces and communication, operate in a push-driven economy, while your mobile, which is digital technology, is a demand-driven technology. It's a technology of the demand. Okay, so I'm explaining to you with this little example. You never ask me what's going on Amazon, right? You go on Amazon to look for my books, and then Amazon suggests to you something else which better fits your profile, right? But you go there with a clear the decision. And what happens is that that decision is not so clear when you have to invest your money, because typically you want to get into a conversation or need to sign up an insurance contract that is not compulsory. So you want to talk to somebody, understand the caveats, then you can make a decision, right? So, and as you do this, because you don't know much about what matters and how you cope with your uncertain future, you can be offered by the bank, by the institution, by the fintech, in case some products that you can buy. But if you think that digital replaces that relationship between you and a person, or attempts to do that, which is not always the good case, you understand that you have a problem on putting an offer-driven industry onto a demand-driven technology, right? There's few ways of resolving this problem that I'm addressing into my my book, but one is the one that I want to tell you with an example that comes from my own entrepreneurial journey. So basically, you start understanding why realizing what keeps people at bay in terms of self-directing themselves on digital beyond the narrative of the millennials, which is not correct, that will enable you to be successful in your journey as an entrepreneur or as a bank that wants to transform. In banking, right? So there cannot be distribution channel of products on the platform economy. They need to learn how to advise their clients on their, personal journey. That can happen with contextual banking, looking at their non-banking needs, for example, an agri-farm business, resolving their entrepreneurial needs, plugging in finance to eliminate the frictions, or with conscious banking, creating a platform for the planning, connecting advisors to products and to clients in order to follow the clients on their personal journeys. But in the end, it is the transparency that he also defined that is the element that creates trust for people to engage on that digital journey when the relationship is intermediated more and more by technology, so trust cannot be established the way we're used to. So that is also the reason why, as this is a key lesson learned for the fintech and the banks that they've been creating digital ideas, neobanks, but misunderstood that the platforms are not marketplaces, are transparency mechanisms to generate trust. I'm like telling you, the core of the banks and fintech on platform economy is effectively theory and principles of the financial market transparency, which is what I researched on for the last 10 years that I published 2 years ago at Davos. So there are theoretical foundations to explain why this is so, and there are business model examples because I want to make sure that theory is positive, so it can be implemented, is reasonable. And so you have in this new book, The Mixer 2, a new theoretical foundation for your entrepreneurial and banking journey, and examples of business models that operate at the level of contextual banking and conscious banking platform strategies, so you know where you are in your innovation journey.
Fantastic. That's a very good, point to put together. Now, the last question that I want to also check with you is about how can we connect the dots for the financial services sector to navigate this digital journey with value at the core?
Well, we mentioned a few words. We said transparency, and we said that there is a journey of banks on the banking innovation quadrant, which is uncharted waters, right? It's a huge transformation from output to outcomes on the platform economy. Many things are happening. As we move into this journey, what happens is that we are opening up more and more, right? So it's open banking, it's open finance, it's open data. Now, clearly, openness is value because it enables you to accept, right, something that goes beyond your borders. But openness also creates anxiety because people tend to close, right, because they feel more reassured, like a business model that is defined, an economy which is defined. Now, transparency for me is there to set the principles to enable us to deal with open futures, with open architectures, with open ecosystems in a way that as we move through the journey, we trust the technology, we trust relationships, and we trust engagement. And that's where the value comes from. So the axiology which is needed to understand how to relate with an open framework means being very transparent to understand that not everything we can control is called uncertainty. And therefore, we need to augment our level of consciousness, of awareness about what is at stake when we make a decision, being a society-related decision, an entrepreneurial decision, a technical decision, so on and so forth. And so that is the, if you like, a bit more theoretical definition of value, which is on the level of consciousness, scientifically speaking, because I discuss scientific terms and not esoteric terms. And there's many examples that you can basically find in order to understand that. I can just give you one, which is linked to technology. When you raise the level of consciousness of the actors playing with technology to understand how to relate with an open system which is dominated by uncertainty. And that's about the chaos monkeys of Netflix. So you know that when Netflix created an infrastructure, they did something that is very interesting, that has been highly discussed by CTOs worldwide of different companies. So, and people with deep technical expertise, which is about recognizing that when you create on cloud, on hybrid cloud, a very open architecture, you need to have in mind the problem of resilience, right? And therefore the fact that the architecture should not collapse, because you have so many open points, and you know that security is always a great concern and that resilience is a great concern. So now, in order to make sure that you achieve the status where you open the architecture but you don't face collapse, the ultimate criteria would be to remind everyone that stability can never be defined, closed, and realized, because something can always happen that goes beyond our understanding or capability to understand the interactions of such an open ecosystem. That's why they created these chaos monkeys, which are random servers, random processes that hit the servers in production, tearing them down, to make sure that all the technical architects are forced to continuously remind themselves that the future is open, that the architecture is open. Therefore, they need to relate continuously with the problem, revising the assumptions and the decisions. And so they find a way of managing the platform that reduces the collapse of the platform. Some servers go off, but the whole interaction basically remains. And that's basically one example of how you can create a high level of consciousness to increase the anti-fragility of the system that can be moved from technical side in contextual banking, which is operating at the edge of chaos, into conscious banking, which is where you help people relating to the fact that the future is open in a conversation with the bank, and keep on revising the reasons why you decide to make that investment, you decide to take that credit, you decided to save that money, so on and so forth. And that's continuous engagement that reminds you that nothing is set in stone, that creates conscious decisions, which is beyond financial education, that allows you not to be exuberant, to avoid the fear of missing out, right? To get out of this, not to get into the scam, not to get out of the scam, not to get into the scam, right? Because you're not seduced by the impossible, but the more reasonable. And that has an impact ultimately on society, transferring the value from individuals, the micro level, to the whole society, which is the macro level. And that's all through transparency about the open futures.
Interesting. And this transparency has to be built grounds up from ground zero rather than.
Yes, it's an institutional transparency, right? It requires regulation, so central bankers and regulators to act together with industry, because it doesn't typically happen, because the weakest link, it needs to be protected. But if you revise regulation in the light of transparency, and most of the modern regulation has transparency as the core principle, you can understand how that can turn into a business model that generates value for both the shareholders and the client themselves. And there's a possibility. Now, the platform economy today allow us to revise the way we work with transparency at core to generate new value. And it's really the fact that we can operate on platforms that unlocks this possibility way more than in the past. So we're at an inflection point. I think that if you get that right, we create a positive future. If you don't get that right, we may face another collapse. So better discuss seriously and clearly about this.
Wonderful, Paolo. I think that was a great conversation. I loved your examples. And I think you have very well integrated all your examples into the theories that you have made to make it much more, understandable. And let's try to unlock together a lot more value, a lot more transparency, and a lot more customer experience for the financial services sector. Thank you so much for being a part of this conversation.
Thank you for the conversation.